Money to be made when there's blood on the street, said one of the oldest financiers of the history of banking and capital markets, Rothschild. Nathan Rothschild is credited with coining the term contrarian investing. Let's learn more about this in this YouTube video. I'm your learning partner Sushila Hariharan, and this is a great opportunity to understand more about the contrarian investing style that some of the largest fund managers in the world have adopted. There's literally blood on the streets, especially in many of the markets. And these markets of emerging countries as well as of India have literally gone down by almost 8 to 10% since November 2024. I'm recording this video on January 27th, 2025. With this kind of money being lost, many investors are worried as to what has to be done. Do they need to buy more stocks at every dip, or do they need to sell and exit the markets altogether? Let's understand the concept of contrarian investing. Contrarian investors are those who find an opportunity to buy when the markets are down. So they think that when the stock markets are crashing and they're going down, they have to buy more stocks, not sell more stocks, because they find that at every dip in the market, the value of the stock might come down. That means there's so much more potential for it to go up again. These are the contrarian investors who do not consider the trend as your friend, and they decide to go against the market. And many of them have made billions of dollars. Some of the top names include, of course, Rothschild, whom I just spoke about at the beginning of this video, George Soros, and many other fund managers who have been able to capture the markets because when the prices were going down, they were able to spot the right timing to buy into the stock, and thus they were able to ride the wave when the markets rebounded later on. What about on the reverse? What happens when the markets are going up and there's a clear bullish trend in the market and all the stocks are running in the frenzy? Such kind of contrarian investors are those who decide to take profits and not wait for the top or not wait for the peak to come because they can't see the peak yet. So they decided that, okay, it's time for me to sell in a particular stock and perhaps do a sectoral allocation, perhaps move the money out of equities and into some other assets when the tide would reverse in the markets. They are very, very well versed with concepts of understanding how prices move in the markets. What is the trend in the commodities markets, in the equity markets? Can they interlink the two? Can they make an advantage? Can they take any advantage between price differences in different timings of different markets? So contrarian investors think contra. Many funds in India are also there who think contra. To think contra means you think against the trend. To think against the trend needs you to have a lot of guts. Let's take two instances of when the trend may have been your friend. Let's rewind back to 2020 when we had the COVID crisis. In March of 2020 and April of 2020, there were at least 3 instances when the stock markets in India shut down for a few minutes, okay, because the index itself had crashed by more than 10%. This is to say that Nifty, Sensex, all of them, the index itself, not individual stocks, but the mainstream index collapsed by more than 10% because of the uncertainty surrounding coronavirus, uncertainty surrounding economic and business lockdowns, the uncertainty over no tourism, no flying, no cargo movement. There was a lot of uncertainty. And because of this uncertainty, the stock markets, while individual stocks kept crashing, the index itself shut. And if you would laugh at me if I tell you, the Sensex today is at 75,000. But back then in April 2020, it had crashed to almost 36,000. That is how low it had gone, from 45,000 to 35,000. It had collapsed. At this point of time, many investors literally sold out their stocks and decided to buy other assets, their favorite, of course, being cryptos. In the rebound, imagine the contra investor, okay, who held on to the stocks and didn't didn't sell when the slide was continuing, and they got stocks at really cheap prices. Today, the index is at more than double what it was just 4 years ago. So the contra investors are the ones who have guts, who have, as I say, guts of steel, or they have a very strong will to be able to ride the trend, no, to go against the trend, because they are the ones who are thinking the other way. They are thinking that, wow, the market has crashed. Many of us will think, oh no, the market has crashed, there's bloodbath everywhere. Let me also sell and exit and sit on cash, and let me wait for an opportunity to come again. But the contra investor is not selling, he is buying. They're buying more. The contra funds, they will buy when the markets are down. Another example that I can give you was just a few months ago on June 4th, 2024, when the election results were announced, and the markets crashed by almost 8%. They didn't go into lower circuit that day, but they locked down, or they locked a lower circuit of, not lower circuit, they locked at a lower level of almost 8% from the previous closing of June, when the last exit polls were being conducted. And everybody was expecting that the results will be good enough. And then what happened on June 4th? The market had wild swings, and the Sensex had collapsed by almost 8% on a single day. That's the kind of volatility that was there in the markets on that day. The large funds stayed invested, they captured the moment, and then they exited an entire 3 months later because they found great value when the stocks had collapsed. So there are so many instances of where contra investing has benefited the investor, and there are many instances where contra investing has not benefited the investor at all. And this clearly explains that if you have the capital, if you have the guts, if you have the wherewithal, like a full armor ready, then you should be able to make it into the markets when the markets are crashing, because there will be value, there will be gems, there will be the prices that would seem really very attractive for many investors. And this is exactly what the contra investors think. The contra investors buy in a bear market and they sell in a bullish market, because they go against the trend, they go against the tide, because they clearly think that this is it, or this is the right price, or this is the value, because they are largely looking at how much more value can you get from a particular stock, how much more value can you get from a particular industry, how much more value can you get from a particular sector. And this pushes prices according to the contra investors. Is it a risky game? It is a very risky game. It's a very high risk, high return kind of a payoff that takes place, especially for contra investors. But if you have the risk and the risk appetite, then Lady Luck might actually favor you. And contra investors have thus been able to follow their philosophy of contrarian investing, and make lots of money in when the tide has turned, because they've been able to buy when the markets were at the bottom. Right, when the markets are at the bottom, there is no hope. Everybody is pessimistic. Nobody can think a single good thought about the market. This is exactly what happened in 2020. Everybody thought that we are going to be permanently virtual. Permanently, we are going to have online classroom, online sessions, online banking, online trading. Of course, online trading is still permanent only. Everything was thought to be, there was absolutely no sense of optimism in the air. Everybody was very, very pessimistic. Everybody thought nothing was there in the future. The contra investors stuck their neck out and said, no, this is a temporary phase and we will find a solution to it. And they started buying. So they found value in stocks which had crashed by more than 25-26% in that short period of 3 to 4 weeks when COVID-19 lockdowns were announced across the world. They found value because the prices had corrected, the prices had crashed, and they picked up some of the bluest of blue chip stocks at extremely low prices. And today, they have really, and not today, but at least a week ago, when Sensex had hit a large price of a few more weeks ago, when the Sensex had touched almost 85,000, they had really reaped the benefits of staying invested from a 36,000 index right up to 85,000. That is tremendous value creation. But do all contra investors, have they allocated their assets in all in the same proportion, etc.? Yes, they will continue to be very differential in their thinking because their mindset is to think uh, opposite or to think contra to what the trend is showing, to think contra to what the general market sentiment has been, to think contra to see what is exactly the feelings of most of the investors.